Welcome to Course 1, Laying the Foundation. In this course, we're going to teach you the fundamentals of technical analysis. Now, by mastering the basics, we'll have a better foundation from which we can improve our trading abilities. There are going to be 5 modules in this course. Module 1 is called Supply and Demand. Here we'll learn all about the different types of market participants, the basics of price action, and go over the most fundamental concept in trading, support and resistance. In Module 2, Identifying the Trend, we'll learn the difference between ranging and trending markets, and how we can use that information to take better trades. Now, in Module 3, we'll take an even deeper dive and learn all about market structure. What is it? How do we identify it? But most importantly, how do we use it to our advantage? Now, in Module 4, we'll learn about time frame analysis. And this is arguably the most confusing aspect for a lot of newer traders. What time frame should I trade? Which is the best? We'll give you the answer to those questions as well as teach you how to chart watch effectively. Then we'll sum it all up in Module 5 with the most overlooked aspect in trading, risk management. We'll teach you how to size your trades appropriately, improve your profitability, and teach you the basics of math and statistics and just how important they are to your trading. Well, with that said, guys, I wish you the best of luck on this journey. Have fun and enjoy.
Understanding price action. What is price action? Price action is the building block of price, and it's going to help us understand the psychology of the buyers and sellers. Buyers and sellers are going to help us understand later concepts like supply and demand, who is in control, where is price going and why, and ultimately support and resistance, or SR, which Zorn is going to get into later on. So let's jump into some examples of price action. Here we have 3 instances of price. We have a line chart, a bar chart, and a candlestick chart. Before we jump into the differences, let's focus on what is going on here. What's the story that I'm looking at? Price is telling a story in each one of these instances. Here, we can see that price is going up, going down, up, and resuming a trend up. The sellers are here, the buyers are here. We know that each one of these points on a line chart is telling us the closing price. Here we move over to the bar chart. Price is going up, price is going down, we go up, dip a little bit, and resume the trend up. It's the same story, but we have more information. These bars are representing the high, the open, the low, and the close. If we move over to the candlestick chart, it's the same as the bar chart information-wise. We still see the high, open, low, and close, but the illustration is different. We can see that the bodies of the candles are all different shapes and sizes. These are clues that are going to help us to determine who is in control, the buyer or the seller. And ultimately, what is this going to tell us about the trend, supply and demand, and SR as we move forward? So when defining price action, in this lesson and all the other courses, we're going to be looking at Japanese candlesticks. Japanese candlesticks are going to help us illustrate buyer-seller psychology. What are buyers and sellers doing? Why is price going up or down? And how is this going to help us going forward? PA, or price action, is the most basic building block of SR. So let's take a look at the Japanese candlestick. There's 4 components. We have an open, we have a close, we have a low, which is the lowest point price reached during that session. This is called a wick, or a lower shadow. And we have a high, the highest point price reached during that session, also known as an upper shadow, but I'm going to be referring to these as wicks. On the opposite side, we have an open, a close, a low, and a high. On the surface, these look the same. But if we pay attention to this one in particular, Let's look at the body. So the open is here and the close is here. Price goes up. This is telling us that buyers are in control of this session. If we look over here, price opened here, price closed here. Price went down. This is telling us that sellers were in control of this session. Now this is a black candlestick and this is a white candlestick. And for the purposes of this lesson, white will be buyers, black will be sellers. But the trading software around these days, this is going to be default as green for buy and red for sell. So now that we know the components of the candlestick, let's look at the psychology. A larger body is telling us that more buying or selling is occurring. This is illustrating confidence in the session. A smaller body is less buying or selling. This is illustrating indecision. If we look at the wicks, a long lower wick is exhibiting seller exhaustion, meaning the buyers are stepping in. If we look at a long upper wick, we can see that buyers are exhausting and sellers are stepping in. And we're going to take a look at this on single candlesticks to get a better understanding. Here we have single candlesticks, spinning tops, also known as small dojis, inverted hammer, shooting star, hammer, hanging man, marubozu, and a family of doji candlesticks. So if we start with the spinning tops, what did we just say about a narrow body candlestick? Not too much activity and indecision. Well, let's look at why. We have a wick to the upside, we have a wick to the downside, we have an open, and we have a close. But the area between the open and the close is fairly narrow. This is telling us that there's no dominant party, the buyer or the seller, are battling. If we go over to the inverted hammer or the shooting star, we see that there's long upper wicks here. 1, 2, a relatively small body, so we know that sellers were in control. As we get into later sections, we're going to talk about how the shooting star and the inverted hammer differ. It has to do with where they are in the trend. This occurs at the top of the trend, and this one at the bottom. The same at the hammer and the hanging man. We have a long lower wick, small body, small body. This is suggesting that buyers are in control. And just like the inverted hammer and the shooting star, this is going to be dependent on where it is in the trend. But we'll get into that later as we go over candlestick formations. The marubozu is a very dominant candle suggesting one party is in control. We're opening here, we're closing here. The buyers are in control. We're opening here, we're closing here. The sellers are in control. Now, if we move down to the dojis, let's start with the gravestone doji. As it sounds, a negative connotation. We have a long upper wick. As we know, the sellers are in control and virtually no body, so the buyers are really not present. This is a negative, price would be going down, so the indication is sellers would be taking control. On the flip side, very small body up top, long wick down below. The dragonfly doji is suggesting that the buyers would be in control. If we go flip over to the long-legged doji, we see we have a very small body, a long upper wick, a long lower wick, and this is a difficult candle to discern who is in control. This means indecision. Typically waiting for the next candle or the next move by a buyer or seller is the smartest move. If we look at a 4-price doji, it's not as common, but you will see this on smaller time frames like 1-minute charts. So moving on, let's take a look at a real-life example. What did we just learn, and how can we put it to work? Well, let's start over here. We have a doji, indecision, not sure what's going to happen, followed by a strong marubozu to the downside where sellers are in control, followed by another big impulse down. Here the buyers step in, push price up, get to a point where this long upper wick is suggesting sellers are back in control, and the trend resumes down. And we move up a little bit, a reversal, and here the trend is moving down, but we see this doji type candle with this long lower wick suggesting buyers are in control, and the trend has started to resume up. We get to a pause. Here's our doji, indecision, another down candle by the sellers, and so on. So if we're starting to analyze the candles and look at what it's telling us in terms of buyer-seller psychology, we can begin to piece together a storyboard of what is going on between the buyers and sellers, supply and demand, and ultimately support and resistance. So as you start to look at candles, try to figure out what is this time interval telling me about the buyer and the seller psychology? And how is this going to help me going forward to look at trends and possible reversal points as I look into planning trades and advancing further in this course? So let's recap. Price action is the market participant psychology illustrated through candlesticks. We saw this in different types of single candlesticks, and this helps us identify who's in control. Who is in control of the session? A buyer or a seller, and why? We saw this based on different shapes of bodies and sizes and wicks. And lastly, what does this tell me about price and the mindset of buyers and sellers going forward?